Hello traders, I'm redoing my weekend video real quick. I tried to use Zoom to do my screen capture and it just didn't work, so I went back to my old way. Okay, some things to be concerned about this week. I'm going to start off with this chart here I found on the internet. And basically, if you they did a study, and if you spent $100,000 and bought this past Friday, the day of OPEX, and held it till the next following Friday, the following week, and they did this based off OPEX the week after OPEX, quota witching, and they did this study. So basically, a week later, if you had held the uh, securities, you would have went from $100,000 down to $62,000 on this study. So I don't know how accurate the study is, but generally speaking, the week after quad witching is a bad week for the markets, or a down week for the markets in general. So just keep that on your radar for this week and plan your trades accordingly. And then the second thing I want to point out, I had mentioned last week on multiple times in the chat rooms and on the videos, that this week and next week is the gut of the blackout for buybacks, share buybacks. And a lot of the action that was hitting the tape last week, in my opinion, was window dressing. They were ramping up buybacks. Instead of having their normal distribution for buybacks each week, they were they were increasing their buybacks last week in lieu of the blockout period. And what they managed to do, they pushed markets right above critical resistance on the close. So that's why I call that a window dressing move. We normally typically see this at the first of the year, but I do think that's exactly what happened, and we're going to drop back inside of our range and build out for a while. We'll see what happens, but I do think we've probably got a significant top for the short term, mainly speaking. But you never know. We had the FOMC this week. We had the EU out with stuff this week. The markets can keep going, but that's something, a theory that I am floating out there right now. Okay, some charts that I'm looking at here, and that I think are ready to see some significant strength here. JD has been a top volume leader for weeks now. It's one of the hottest stocks in Chinese stocks. And the Shanghai Composite was up 2.5% overnight. So this one here is on my watch. We're coming off of a support area after having a gap up on earnings. So this thing here, and we're going in, I'm using the log scale. So we are going into an expanded region for larger moves here on JD.com. So if you want to take a week or 2 weeks out on JD calls, if you're bullish to market, this might be the time to take that type of a bet. And then I also wanted to talk about what I was seeing here in Apple. This was right here. Right here is last Monday. And we saw serious volume coming in Monday morning in Apple. And it's no coincidence, come Monday afternoon, we have a press release out of Apple for a new product announcement there. And so I really think Apple was really buying up their shares to push it up above resistance going into this news event. And then we saw continuation and possibly even more buying back on the part of Apple to, basically we have a head and shoulders situation right here. We managed to close right above that head and shoulder situation for the week. And I'm kind of thinking Apple buying their own shares back is what propelled this up like this into a potential blackout period. Now, I'm not for sure if Apple's actually listed in that blackout, but considering the price action I'm seeing, I really think Apple was one of the stocks that was on the blackout period. Okay. Another one to really keep on your watch here, and that's your Broadcom. And the earnings were okay. I looked at the earnings; they were okay, but the guidance was what really drove this thing up. And I do want to point out here, we are in, well, not necessarily. It's a compression area right through here on our log scale. So just keep that in mind. We we closed above prior resistance, and if the markets do get a sell signal, just keep this one on your watch. I kind of think this is going to walk the line up, um, but the guidance was the main thing out of Avgo that drove it last week. Boeing, we have a clear pattern going on here. Right shoulder, head. That's exactly what I'm thinking we're setting up here. And it's no coincidence that the Dow is actually leading to the downside this morning. We even had more bad news over the weekend that there was a Seattle Times that they had tried to contact Boeing for a press release 11 days before the crash about safety concerns, and basically there was knowledge out there that there were serious problems, and they did not ground the fleet according to the article. So if you guys get a chance, it is listed on the I'll try to put the link at the bottom of the video. But basically, I am expecting Boeing to come crashing down, and quite possibly before the end of the month be tagging the 310 area, very possibly here on Boeing to before the month's out, because we have got one heck of a red candle already on the monthly chart on Boeing, and boy, you talk about an epic move already, and I just see more continuation coming. Another stock that just took off to the moon come Friday, and I personally could not find any news to suggest this big move into quad witching. I really think the company, they have a huge buyback program they announced. I think they came in and they were supporting price somewhat until they finally gave up into the afternoon hours. So I'm actually thinking this one here is going to come back in and fill the gap. I think there's a good chance that this was one of those that they were doing the window dressing on this stock. So just keep that in mind. We're actually at the top of the ranges on our volume profile study here. So keep that in mind. After last week's stellar move in the semiconductor space, I did want to point out here we have book-ended weeks on ADI, analog devices, and this is one of our top volume leaders, has been for quite some time now. So this one here is a continuation pattern until proven otherwise. So, but we are getting really extended on so many of these patterns. So keep that in mind. You know, it's had short burst above, but you know, it's getting a little lofty up here. And the main reason I point this out, you notice how I got my log scale? We're right up here in the rapid move area on ADI. So if we do get a bid in the market, this thing can move faster than normal. So I do want to point that out based on the log scale. Exactly what's going on ADI here. I wanted to mention Amazon here had a very strong close right at the top of this consolidation range. We are on the verge of an accelerated higher volatility price zone. We are right on the verge of entering that if the markets were to catch it. And if you notice on our weekly here, our MACD, it has plenty of room to take off if it decides to take off here. So that is one on the bullish side. Just keep that one on your watch. On the flip side, Dick's Sporting Goods had very bad earnings. I don't think it's done. We're going to come to at least down to this range lows. The reason I mentioned it, we are in a fast-moving zone right here, and it still has some more downside potential here. So keep that in mind based on your log scale. Another one I want to talk about is Nike, and I have said for a while now I think it's overpriced with everything going on globally, and we are in an accelerated. You see how your price patterns are spanning out here. We are in an accelerated higher volatility zone for Nike, so keep that in mind. I think we are putting in a head pattern situation here. That being, well, that's really not a very good head, but we'll see what happens here. I'm not nearly as bullish as a lot of people are on Nike here. And if you move out here, you can see this is where the max area should have been 400 from the primary trend. So yeah, we might be seeing a top here in Nike. Transports are doing really bad here. On our weekly here, if you can see on last earnings, it just got decimated after the earnings, and it's fought back a little bit after the guidance. And so far this quarter, when with companies in this situation, they have short squeezed it higher most of the time. So just keep that in mind. The transports are looking really bad here. If they were to tank this thing, I mean, it's going to be really bad for the markets. But I did want to point out here, if you go higher above the 190 area, then you start getting a little bit wider volatility situations going on here in FedEx. So keep this one on your radar. Yeah, I just noticed my 200-day moving average isn't on here, but our transports are trading below the 200-day moving average. They're up here a little bit. Um, I got the free service on um, Trading View, and I can't put any more studies on right now. Micron came out with very bad guidance, and we've had a little rally up since last quarter. So we'll see what happens here. Like I said, all these stocks, for the most part, that have been given bad guidance, they've been buying them up on the earnings. But now, since we are in the shutdown for the share buyback, a lot of these might not continue that trend. So keep that in mind. We are in the bearish side on the weekly too. So this is a bearish chart going into earnings this week. Another one I want to show you here, and that is Netflix. We are in a higher volatility range expansion zone for Netflix, and it has been catching a lot of. This is a very bullish chart for Netflix. This one's actually even more bullish than Amazon, in my opinion. So keep this on your watch here. I think it is poised to take off when if the markets decide to go higher. I've been liking Xilinx for a long time here, but if you look at your volume profile situation for Xilinx, um, I'm not actually going to take this trade to the long side. I think it's going to hit the 130 area here, possibly this week, but because it's so extended on the weekly volume profile, and we're actually getting a divergence on our signal on the volume profile as well. So this is just not one that I'm going to try to push to the upside. If this market's would have to correct, this thing here can crash down pretty hard. We have 3 biotechs going for FDA approval this week. On Tuesday, you have Sage Therapeutics, and it's a depression drug that they are going to make a judgment on that this week. So this can be a major mover on Tuesday, one way or the other, depending on that news. Sage Therapeutic. Then we have Jazz. Might have to stop this for a sec. Jazz Pharmaceutical. We have for excessive sleeping. They have a drug that they're going to get approval for people with narcolepsy, and so that's going to hit the tape Wednesday. And then finally, we have LXRX. And this is a cheapie stock. This is probably the one that's going to move the most this week, and that's diabetic. It's a diabetic drug. And if they were to happen to get approval Friday, this thing here could rock. It could be a double real easy, depending on the news. So you may want to put a little bit of risk on there, just going into Friday for that CSIQ, I mean the solar companies. There's 2 or 3 of them reporting this week, and they are showing extreme relative strength here on the solar companies. But as you can see here, versus the volume profile, this is quite overbought in my opinion, and the potential for downside reversal in the solar stocks this week to me is extremely high. I don't think the profile is supporting prices going into these numbers this week. So I could be wrong, but I think the solar names are going to come crashing down maybe be some of the worst performers this week. And keep in mind, a lot of money has been parked in utilities, and utilities are completely and totally, virtually maxed out right here. And there's no sense to even park money in utilities other than you're actually better to park them in bonds at this point, actually. So a lot of risk that the utilities are going to start rolling over this week. Okay, another view. I want to show you the futures this morning. I'm at 5 a.m. here, and look what's going on with the bonds here. I mean, they are not given a dime back on these bonds. I mean, we just continue to go higher and higher on these bonds. If this is not a red flag on the market, I don't know what is. I mean, they're simply not giving anything back. So we've definitely got a disparity here. Something's got to break sometime here soon, either the bonds or the markets. And I'm leaning more and more towards the markets themselves. But I could be a lone person out there saying with that scenario. The ES is up, the S&P is up, gold's up a little bit. Those are the leaders. The Nasdaq's up, a little bit lighter volume on the Nasdaq. But if you notice here, we're down 22 points on the diamonds. That's your Dow Jones Industrials. So keep that in mind. There's still, the Dow is kind of pinned here because of the whole Boeing mess. So keep that on your radar. Okay, one stock that I'm really concerned about here, and that is Facebook. We have looked above this trend line, and I really think we're going to see Facebook coming down, breaking that trend line here real soon. Honestly, what's going on here after this latest thing, I think there's going to be increased pressure, and I think it's rightfully so that live streaming video, it needs to be moderated. So these companies that are giving live streaming video, they're going to have to start charging subscription fees at some point here in the not so distant future. So keep that in mind. I do think it's going to be much more increasing pressure against the social media stocks for live stream content. I want to give you an idea here. My monsters of tech, that includes your FANG and your Microsoft. We're right here at the top of this channel, and for the past few days, we've just been hanging out up here. I honestly think we're going to be coming back into this channel. I don't think we're actually going to break out. But like I said, the NASDAQ does have a bid, so we'll see what happens here. The FANG names, these monsters of tech stocks, they are the ones leading the NASDAQ as of last week. So this right here, if it starts to break, it's going to be bringing a lot of the market with it. So just keep this one on watch. There was a merger deal announced. The bad was wanting to merge with the bad over there in Europe and cut a bunch of jobs. And I don't even know if the Eurozone will allow them to do it, but we're talking about 30, 40,000 jobs being cut over in Europe just to merge these two bad banks together. Not necessarily a bullish indication in Europe one bit, but the banking sector seemed to have a little bit of bid this morning. And if that's the case, it's bullish for possibly bullish for our financials too. But I am keeping a very close eye on this channel. We're in the high volatility zone. It can go either way real quick. And so if the markets do start to slide, this thing can slide real quick here. So just keep this one on your watch. Another one to really keep a close eye on, because your Russell tends to lead the markets. We got to be very careful here. The Russell is setting up to quite possibly tag the bottom of our trend line, our channel, uptrend channel, today. And so if that starts to show some relative weakness, it could be very bad to the markets. And it's really been showing quite a bit of relative weakness for quite some time now. So we're coming right into that channel, potentially rolling back lower for the Russell 2000. And this is a major breadth indication of the markets. So just because price is going up on a few stocks, the Russell is more important because that's your breadth. That tells you how much money is flowing into a lot of the vast majority of the U.S. markets. And I do think this one's really lagging here for the main reason money is moving out of the U.S. back into China and back and starting to slowly move its way back into Europe. Okay, the most oversold areas in the world, some of the money's coming out, going into those. Even though we had huge money coming into the market supposedly last week, I think most of that was due to these stock buybacks. Here's another ETF on tech. Well, you know how bullish tech has been? Well, this area here has not been so bullish. It's called the IGV, the Expanded Tech Software. Okay, this has been a major driving force for the markets, and we're literally trying to cross out of the software. And some of these, like Workday and there's so many. I think Twilio's in that too, and Team. Boy, I can't remember all of them now. But at any rate, keep a close eye on your software names. I think even Microsoft's included in this ETF too. We do seem to be crossing out of this uptrend channel. So another one I want you to look at here, and that's your transports. Major leading indicator for the markets. We are right here at the bottom of this channel from the December lows right here right now, which could very well go sideways. It is very important to note, though, that's where we're at, and this is the 125 SMA. So this is generally bullish to market, and below it is bearish to market. So just keep this in mind. We got FedEx this week. That's a major contributor to this index. And the final one I want to talk about, and that's your diamonds. And this goes with your XLI. And here's your channel from the December lows. We are literally going to be breaking out of this today, most likely. So we'll see how the markets perform today. But yeah, it's barely holding on to that channel. And we're going to be most likely, with its opening down on the Dow Jones, we are literally going to be gapping down and away from that channel starting today. And what's confirming that a move, your industrials, your XLI, similar situation. We are right there. We closed right on the bottom of that trend line. So this could be bode bad for Caterpillar. It can bode bad for Deere. And, you know, the way the agriculture prices are right now, that's not good for Deere either. It could be bad for hog. Could be bad for Boeing, of course. So keep those in mind here, that we are breaking some potential upside, and not to mention your automobiles and stuff like that. You know, all the industrial spaces here. It looks like your industrial side of the market is going to show relative weakness this week. Okay, that's just some of the ideas. I'm sorry about all the lines. I didn't clean them up real good. I hadn't planned on redoing my videos. If you liked the video, tell me if you like it, and leave comments below if you can, and I will see you guys tomorrow if I get a chance. Thanks a lot, and good trading.